I want you all to get used to evaluating subsequent activity when building your WIP schedules. By subsequent activity, I mean activity after the balance sheet date. Suppose our balance sheet date is December 31st, 2023. Our subsequent activity would include everything from January 1 of 2024 and onward. A lot can happen after the balance sheet date. One, we may have recorded costs in 2024 that belong to 2023, something to keep in mind. We received the invoice late and didn't get a chance to record it in the proper period. Even though those costs were incurred through 2023, we recorded them in 2024. That is incorrect. You need to move those costs back to 2023. You do that through an accrual. You will record a liability and the associated cost, which will increase your liabilities and increase your costs. And those increased costs should flow through to your WIP schedule. So that would increase your cost to date on whatever project it was associated with. The other side has to do with contract amount and estimated cost. So in this example, we have a contract amount of $650,000 and total estimated costs of $520,000. Cost to date of $435,000. This is the accurate cost incurred through December. We've got everything in the proper period. That's a good number there. Billed to date, same thing. We billed $520,000 through December 2023. Under billings of $23,000. That's not too bad. Now, looking at the subsequent activity, we see subsequent billings of $220,000. Now, if you do the math quickly and you take your $220,000 plus your $520,000, you can see that it's more than the contract amount we had originally listed here. So this may have just been original estimates, and that's why there's a difference, but it's different. Now we look at the costs on this job as well, and see there were $200,000 of costs recorded in 2024. Well, we take those subsequent costs plus the cost to date through 2023, and we have more costs. We have a total cost of $635,000, which is obviously more than this $520,000. It's $115,000 different. Now, looking at this, what I like to do is incorporate the total activity to represent the actual numbers of the contract, both the amount and the cost. In this case, we're saying this job was completed after year end. So we can work with actual amounts, and these are no longer really estimates because we know the job closed out. We've done the punch list. Everything is done. But our original estimates didn't include the subsequent activity. We just stopped. This was our original WIP amount or WIP estimates. But now we're so far along in the year, we see that there was enough activity that changed the work in process substantially. So what I do is I use the total billings on the project. So if you see the $740,000, that's the incorporates the subsequent activity, and I use that as the contract amount. And the same idea for the total estimated cost. I use the total amount at which the job closed at. I don't go in here and change the bill to date and cost to date. Whatever activity happened through December 31st, 2023 stays there. I'm not going to push any of that subsequent activity if it doesn't belong in 2023. But I will adjust these estimates to provide a more accurate picture of the project at close. Hindsight is 2020. I know that job is going to have a gross profit of 14%. So I'm going to use those numbers. You see, 20% gross profit initially went down to 14%. Now, if we look at the percent complete, that changes too. 83.7% complete with our original estimates, but now we're 68.5% complete. We had underbillings of 23,000. With this, we have 13,000 in overbillings. We see those changes occurring because we change the estimates to reflect actual numbers. Again, hindsight is 20/20. You provide a better picture for the underwriters or the users of the financial statements of where that job is. One thing I forgot to mention as well is this cost to complete amount. We had 85,000, big difference between 85,000 and 200,000. That's again because we changed these estimates to reflect the actual activity on this job, and we wouldn't have known that unless we looked at the subsequent activity. So what I don't want to see is a quick whip schedule of saying, yes, contract amount 650,000, total estimated cost 500,000, and I look at the subsequent activity and see that it's more than the contract amount or estimate originally provided. If it all has to do with the same contract, we should adjust the estimates to reflect what actually happened. I hope that was helpful. If you have any questions or comments, please leave a message below. Otherwise, thanks again for tuning in. I'll see you in the next lesson.